Hello, ladies and gentlemen. Welcome to this edition of Florida Real Estate News. This is a really important one because I got great news if you are looking to buy in 2022. There have been three really important developments just this week, like just a couple days ago, that will affect you drastically in you obtaining a mortgage. Now, I'm going to mention different things like Fannie Mae, Freddie Mac, HUD, all these different agencies and organizations and stuff like that. Now, I'm going to want to do a general education video eventually so you understand the background on these things. But right now, these are important. These are current. So I want to just kind of skip over that and get to the practical brass tacks, things that you can apply practically to your life and that will affect you today. So we're going to go over these developments and it's really good news for you. So the first one, the big news, is that the mortgage rates are actually dropping. Now, news everywhere, it's Chicken Little, the sky is falling. All you ever hear is that the interest rates are going up, 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 up. And they've been crawling up. But over the past 2 weeks, they've actually dropped 0.5%. They were at about 5.81, currently down to about 5.3. That's 0.5%. 0.5% is significant that if you're going to purchase a house between that like 300,000 to 400,000 range, it's just kind of a general price range, that practically translates to about a $20,000 difference in the house you can afford because you calculate how much you can afford to pay each month. It'd be like a little over $2,000 a month, and that's not including taxes and stuff. That's just mortgage. So that puts you in that price range there. It makes a difference of about $20,000. So that's significant. That's important. You have to remember too, even though the mortgage rate is going up and everyone is crying that it's a disaster, they are still traditionally low. They were just insanely low. They were so low that that's actually what's causing the problem a little bit. It was too much free money out there, and that was what was causing this recession that we're going into. So the mortgage rates are climbing a little bit. Usually as they go up, the price of houses tends to go down. So what you're actually spending per month stays relatively the same. So there's not really a reason to panic. But right now, the good news is the rates are dropping. So you are probably at the prime time. If you are a buyer, you have lower interest rates, but a market where everyone thinks the interest rates are high. So you have lower prices on the houses right now because there's not as many buyers who are in the market right now. You're starting to have more sellers. So that ratio is starting to shift a little bit. It is still a seller's market, especially down here in Florida, but it's starting to move a little bit. But you have decent interest rates and decent prices right now. So now is probably a good time to buy. Now on top of that, the second development is that starting July 10th, which just happened, Freddie Mac is now considering it's a loan product advisor. It's basically an automated system that figures out if people can afford a mortgage or not. They are now calculating in rent. So to your surprise and chagrin, up until now, what you were paying to live as a renter wasn't factored in to the calculations of what you can afford to live as a buyer. It's crazy. They go by your FICO score, which traditionally needed about a 620 FICO score if you want to obtain a mortgage. But that's based on like car loans, credit cards, stuff like that. And the irony is if you've been living a responsible life and not taking on debt, you probably have a really bad credit score. So there are people out there who would be excellent buyers, who are very responsible, who always pay their rent on time, who aren't able to get a mortgage. Well, now they will factor that in. And if you are a responsible renter who has always paid your rent on time, you are now eligible to get a mortgage. So that's really good news. It's way, way, way overdue. It's something that should have been in place all along, but at least now it is. So that's good news there. Now, what do you need? Very important in life that you document everything. So hopefully you're paying it the old-fashioned way, pay by check. Probably not going to be the case, but hopefully you've been paying by check. That's nice to document from your bank. If not, you also have like Zelle, PayPal, Venmo, stuff like that where it electronically tracks it. So hopefully you've been tracking your payments and you can document that you've been paying on time. If not though, and you find a proper underwriter, you can certify from your landlord, he would testify that you do pay on time, in which case you would be eligible for this. So you need to have a history of at least 1 year, and you have to be a first-time home buyer to be eligible for this, but it's a really good development. Now, equalizing the playing field, and you'll see most of these developments I'm talking about has been about making it fair for everyone and really making everyone eligible to buy a home, because the government really does want the average person, the most people as possible, to own a home. And that's kind of why I got into this. I believe in the American dream, fought for it as a Marine, defended it as a cop, and now as a realtor, I want to make it available to everyone. I don't want to just preach capitalism. I want to practice it. I want to help you become a homeowner and get that home of your dreams and get your little piece of property, because that equates into liberty. So we're on board. That's what I want to do. Now, our last development deals with the draconian overreaction with these lockdowns and the COVID, which basically has destroyed the economy of all the U.S. except for Florida. See, in Florida, we didn't lock down. We continue to live like Americans, which are free, autonomous citizens. And because of that, we have a $22 billion surplus this year. So that's 22 billion with a B, because we are doing so well. And that's why people want to move here, because we didn't lock down. We kept chugging along. And Florida supplies plenty of services for its people. If you want to see what they are, on my Facebook page, Loving Florida Living, I kind of put things out all the time that's eligible for our citizens, the things we make available. But even with that said, we've brought in so much, it's a $22 billion surplus. So we're doing well down here, but that's not the case for everyone in the nation. And we know that, so the government had to do something to make people qualified. You see, to get a mortgage, you generally need a 2-year history of employment. So you have a great job you just got, your contract says how much you're going to make, you're going to make all this money. It really doesn't matter to the bank. They need to see not just what you're going to be doing in the future, but a history of what you've done over the past 2 years. With COVID, most people don't have a history for the last 2 years because it was drastically interrupted. Well, good news. According to, we have the FHA Commissioner, Julia Gordon, released this statement. Said the pandemic affected the livelihoods of tens of millions of workers in this country, particularly workers of color and those at the lower end of the wage scale, limiting these families' home ownership opportunities because of the unavoidable impacts of an unprecedented global health crisis when they are otherwise well qualified for a mortgage is unnecessary and contrary to this administration's goals and the FHA's mission. Great news. So on July 7th, they released the Mortgage Letter 2022-09, which addresses all FHA approved mortgagees. So I'm not going to go through all of it because it's about 47 pages long. If you want a copy of it, feel free to give me a call at 863-377-0037, or you can email me at edkisselback@lovingfloridaliving.com. I'd be happy to answer your questions, help you out, or just email you the letter yourself so you can go through it and find out exactly what applies to you, because everyone's situation is different. I'm just going to give you a quick overview of what it says. And it basically says that if you are salaried, they have to calculate your effective income not based on an average over the past 2 years, but based on your current salary, and the assumption is that it will continue at that rate moving forward. Now, what if you're hourly, you're not salaried? Pretty much the same thing. They have to calculate your effective income based on your hourly wage as of today. Now, some people don't work 40-hour a week. They work kind of erratic hours. Well, if that's the case, and your hours vary, they take a current average, which includes overtime, bonuses, tip income, etc. Now, the other case, say you're self-employed. Well, all you have to do is prove that you've been self-employed in the same business for 2 years total. Now, that could be including an aggregate time of months before the lockdowns and months subsequent to them. It just has to be a total of 2 years in the same business. Now, how do you prove that? What did we talk about earlier? It's documentation, documentation, documentation. So all you have to do is provide your individual and business tax returns and also your profit and loss statements with your balance sheets. So as long as you can prove you've been in this business for 2 years, you're good to go. So I hope this was very informative, very important news. If it was helpful to you, please like, subscribe, and if you think someone else can benefit from this, share it with them, send it to them. Now, what's also important is if you are looking for a realtor, don't just look for a pretty face. Don't just look for someone who's charming. You don't need someone that can sell you a house because the house sells itself. It's whether you like it or not. What they're providing to you is their expertise, and they should be an advocate for your needs. So you need someone who is not just charming, but someone who is on top of the market, who's finding out these things, like these 3 developments just happened this week, who's finding them out, and more importantly, not keeping them all to themselves, but sharing them with you, letting you know what's up so you can make an informed decision. That's what it's all about. That's the relationship, is providing you with the information and expertise you need so that you can make wise and informed decisions. Now, if you would like me to help you out, I'd love to. That's what I'm here for. And even if you're not in my service area in Central Florida, I'd love to hook you up with someone who has the same mindset that can help you out as well. So give me a call at 863-377-0037 or email me at edkisselback@lovingfloridaliving.com. Now, hopefully I will see you on the next episode of Florida Real Estate News.